Athena dwarfs the entire TVL of Solana DeFi. Just one protocol, right? There's probably multiple protocols in the top 10 of Ethereum that dwarf the entire space here. We have a long way to go. And there's an angle that we have here that I feel like is very unique, which is this internet capital markets thesis and new types of assets coming on chain. So I'm very optimistic there and really just want to see where other companies like on this space will take it and how much farther the DeFi space can grow here.
This episode is brought to you by Sablier, the leading on-chain solution for token distribution. You'll hear more about them later on in today's episode. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice, or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hey guys, welcome back to another episode of Lightspeed. Today I'm joined by Plish, or Narek, of Hylo, co-founder, CEO of Hylo. Great to have you on today. How you doing?
Doing well, Danny. How about yourself? Thanks for having me on.
Doing great. I actually, Carlos from the Blockworks research team has been very excited about Hylo, wanting to talk about it more. He recently just wrote and published a report on the Blockworks research site. So led to me wanting to reach out and chat with you here on Lightspeed. And that's kind of how I think we sort of ended up where we are today. But maybe just to get into it and to get into yourself and kind of what you're building, can you give me and the listeners a little bit of a background, maybe on yourself, and then also sort of like what the inspiration for building Hylo was?
Yeah, so a little bit about myself. I am a longtime tech lead software engineer from the Web 2 world. I was in the enterprise boom in Silicon Valley, like in the 2010s, and then pivoted over to Web 3, like in a corporate context, late 2010s, like 2019 or 2020, like during that cycle. We were doing like NFTs and stuff for major enterprise corporation. And that was all on Ethereum EVM chains. And started to realize that it doesn't make sense to do Web3 in that context necessarily, like when there's a bunch of restrictions. And so started looking around at where could I build a company. And Solana was the place for that. Because it seemed like there was a little bit more of an open field in DeFi, a little bit of a younger space, a lot of support, like on the hackathon funding side, like with Coliseum and the different incubators that you can get into. And so I jumped into Solana after leaving corporate pretty much. And I met the team pretty much through Lamport DAO, the Discord group that was running like in the late 23 part of the cycle, or part of the bear market really. And they had found this crazy white paper from the ETH world. And we started to figure out how could we build this on Solana? How could we market this and make it a product that's accessible for users? And then one thing led to another, and we ended up winning in one of the Coliseum hackathons and getting funded, and here we are today.
So you've started to talk a little bit about sort of this idea. Maybe we should lay that out though. So what exactly, can you give us a kind of an explainer on what exactly is Hylo? How does it work? Get into the basics there.
Sure. Hylo is a new DeFi primitive on Solana. And what Hylo essentially does is it inverts the basis trade. If the listeners are familiar with how the Athena model works, where you're holding a spot asset that maybe has some yield and some volatility, and then you can short it in an external venue and reap the funding rate or cover your losses as the short becomes profitable. Hylo inverts that concept because we are a fully self-contained way of delta neutralizing liquid staked Solana. And so what the protocol does is it accepts LSTs, the liquid staked Solana, and it mints against those LSTs one of two tokens. We have this stablecoin, HyUSD. This is our flagship stablecoin. That's a store of value, fully one-to-one, backed by Solana. And then there's XSOL, which is a tokenized leverage position that hedges out all the volatility. So what Hylo has essentially done is inverted this concept of like neutralizing and splitting risk and stability into two things. It's all one protocol. And so at any time, the market cap of XSOL and the market cap of the stablecoin HYUSD, they must add up to the entire TVL of the protocol. It's kind of it's a beautifully simple invariant that we enforce, and this is the core of what it does. What it creates is a very fun way to do leverage and a really, really high yield bearing stable.
Okay. That makes sense to me. I guess you mentioned sort of a different approach than, maybe like a delta neutral stable coin or something like, USDE is kind of the popular example. I guess, can you talk about, folks maybe gaining exposure to something like HYUSD in relation to those other like delta neutral products that exist? Like, is this a different target customer? Is it like the same customer or user that you'd expect, or kind of how does this place itself within the market, you think?
HYUSD's place in the market is pretty much, we are trying to be Solana's DeFi native dollar. That is our calling card, our hallmark, and we want traders and all on-chain citizens to store value in HYUSD. It's a little bit different from the delta neutral playbook in that it's a self-contained protocol. It's truly decentralized. It is a program. There is no trading desk. There is no magical trust barrier that you throw your money through. It's a program. You can audit what it's doing. You can see the vaults. You can see where all the money is. So it's a very pure architecture in that regard. Our target customer is really anybody, but we understand that it's a lot of the on-chain natives and traders and yield farmers that are all over the place in the DeFi landscape in Solana.
Yeah, that makes sense. And then the other side of the coin, obviously, it's HYUSD and then XSOL are the kind of the two components there. So the XSOL piece is sort of like this kind of leveraged exposure to SOL that sort of rebalances depending on what's going on with the makeup of the protocol there. Like, I guess, can you speak to that? Like a comparison of, for example, holding or utilizing XSOL in relation to like a traditional LST or something else?
Yeah, XSOL is a tokenized leverage position. It varies between 2 to 4x leverage. So unlike a spot borrow levered trade or a perpetual, where you can really finely tune exactly the leverage that you're getting, the leverage for XSOL kind of fluctuates a little bit depending on the supply of HYUSD around and also just obviously the price of Solana. But it tightly is in that 2 to 4 range. It very rarely exceeds 3.2x. The use case for XSOL is pretty much leverage trading without thinking about management. Where if you've been in the position of opening a 10 or 20x perp, right? Like nobody is, you believe in God during that time pretty much, right? I forget what that phrase was that people said. No one's an atheist at 20x leverage. We're trying to invert that UX. And what we've heard from people is that this is their first time touching leverage after hearing so much in the news about, these liquidation bans getting wiped out by market makers and cascades and the October 10th event on Binance with like ADL and all that stuff. This is the opposite product of that. This is just a token that you buy, you hold in your wallet. We can't liquidate you. There's really no monitoring to do outside of you can just check like where the leverage currently sits and what your P&L is. And that's it. It's supposed to be a dead simple UX for the common trader that's not, epically talented in perps.
Yeah, that makes sense. It's almost, and it's, I guess maybe closer to a comparison to something like a levered ETF almost, but even that's a bit different, right? But you have this aspect of sort of like auto rebalancing, like your position doesn't get liquidated, but also the actual leverage amount is changing as well. So it's not quite, there's like 3x levered ETFs. Those are always 3x. It's not,
Yeah.
not necessarily that you're going to change from 4 to 1 to 2 to to 3.5. So
they're very similar, but we do not regularly rebalance. The market rebalances the leverage. And there is only one intervention point, which is when the leverage gets too out of whack, right? Gets closer to 4. And what that in equal parts does is it brings the collateral ratio on the stablecoin down below 130%. If we get there, there's a activation of the stability pool, which is this kind of yield bearing staking pool that the HYUSD holders are in. Some of that HYUSD may be swapped to XSOL to rebalance. But this is the only point where the protocol intervenes. Other than that, it's kind of market forces and retail flow that are creating the rebalancing effect. So that's why you get this swing, but we also have a lot less volatility decay. If you have the 2x, 3x levered ETFs, they say don't hold on to them for too long because that daily rebalancing to keep the leverage is eating into your return.
Shout out to Peaq for sponsoring today's episode. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders, and the first machine economy free zone is live in the Emirates. And it's all happening on Peaq, the machine economy computer. Head to peaq.xyz to find out how you can benefit from the age of automation. That's peaq.xyz. Thanks to Sablier for sponsoring today's episode. Sablier is the leading on-chain solution for token distribution, trusted by teams like Maple, Immutable, and Axie Infinity. The #1 distribution protocol on EVM is now live on Solana. Automate your airdrops and token vesting, streamed by the second, transparently and trustlessly. Secure, audited, and ready for Solana builders. Get started at sablier.com. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Yep, that makes a lot of sense. I guess we can jump to the risk management piece of this since you mentioned it. That seems to be maybe kind of the core risk. Really, is that scenario you outlined, and I guess you mentioned there's kind of this backstop liquidity of stables that can be kind of pushed into the market if you get to a certain collateral level. I guess in a really severe situation like SOL drops 50% plus, maybe you can speak to like kind of the over collateralization of the protocol today, and like in a serious kind of correction scenario, like are the bases kind of covered, so to speak? What kind of outcomes is the protocol prepared for?
Yeah, just looking at a snapshot of the protocol yesterday versus today, right? Solana price was still depressed near the bottom, probably like 125, 126, something like that. We reached a collateral ratio of 145, I believe. 150 is our normal threshold, right? Anything above 150%. And just to explain the collateral ratio for the listeners, how much gold is there behind the dollar, right? And in crypto, you always have to have more. If you have a crypto-backed stablecoin, you have to have more than a dollar's worth because crypto is extremely volatile, right? And so 1.5 means there's $1.50 worth of SOL for that $1 that's floating out in the ecosystem, right? This is the buffer that we have to protect the value of the stablecoin. So we were underneath 150 yesterday. That we're in essentially what's called stability mode 1. And what that does is that changes the fee structure in the protocol. It makes XSOL cheaper to mint, and it makes HYUSD cheaper to redeem. So if you want to get out, we make the redemption fee a lot lower. We let the market kind of do its thing to rebalance some of that floating supply. Maybe people feel like this is a little risky at 145. Let's exit this position and go to USDC. That's a little different risk profile. That was mode 1. Today, Solana price pumped. We're now at 160% because a lot of people were buying XSOL at the bottom, and all of that collateral came into the system. Solana price went up a few percent, and now the CR has jumped above 150 to the 160 range. If we were to like go reverse direction, right? If we were to get worse from stability mode 1, we're going all the way down to the 130% CR, right? So it's $1.30 per dollar of stablecoin. Once we go below $1.30, this is where the stability pool kicks in. So the risk reward trade off that people make if you want to earn this high yield on HiUSD, which is I think trailing 15% since we launched. It's kind of the highest on this chain that I've seen. If you want to qualify for this, you are opting into having a little bit of your holdings converted to XSOL in the event that the protocol reaches that 129 or 129.9 CR. And so what happens is there's a permissionless crank on the stability pool that will take some of the stablecoin, just enough for it to bump over 130 again and convert it to XSOL. And then once the collateral ratio recovers above 150 again, that XSOL gets turned back to HiUSD. It is often a profitable setup. Like the 2 times the stability pool has been activated in the history of the protocol, it's been profitable for all the stakers. Not to say that this won't happen. This will always happen in the future, but this has kind of been the performance scenario for that activation. And so that's mode 2 where that gets activated. And that's the kind of last backstop for correcting the CR and correcting the leverage on XSOL.
Gotcha. So I guess users or depositors or high USD sort of holders end up kind of being that liquidity of last resort, so to speak, in that scenario. If you get a significant enough and maybe for a long enough period of time kind of drawdown that the price needs to be sort of rectified there, or that the imbalance needs to be rectified.
Exactly. Yeah, that's the risk reward trade-off for high yield.
Okay, awesome. I think I feel like you covered that fairly well. Maybe I think one of the things that's worth talking about here specifically when it comes to Hylo is kind of use within the broader Solana DeFi ecosystem. There seems to be like maybe a big use case for the assets is that you see venues like Loopscale, RaidX, Exponent, like there's a lot of kind of leveraging of Hylo assets in these other locations. And maybe that has to do with, first of all, the reward rates on those tokens in the first place, but then too getting like additional leverage on top of that. I mean, people on-chain degens love leverage on leverage. So it makes sense. I guess, can you speak to that a little bit and like some of those integrations and how that looks from your end?
So our GTM plan was pretty much distribution through integrations. And we've prioritized those since we launched. I think we were only launched like kind of solo as a protocol for a couple months, like July, August. And then we started ramping up these integrations with RaidX, Exponent, Loopscale, Titan. Now we're working on some other kind of bigger or like more established names as well. That's been the plan the whole time. The use profile is like varied depending on which platform you're on. With RaidX and Exponent specifically, these are the yield splitting protocols on Solana. So what people are doing there is they're taking their XSOL holding, which may be it's a slightly risky holding with some leverage on it, and if they want to forego a little bit of capital to essentially lever up their exposure to our XP point system, they could do that. And then on the other side, there's somebody buying the PT token, which is essentially giving them more XSOL by forfeiting all the points attached. So the point speculators, they love that one. People have done the same thing with HiUSD. You're kind of stripping off all the rewards and getting a little bit more money, like a little bit yield on your stablecoin that way. So that's been the big story with the yield splitters. The looping ones, that's where it gets a little bit more interesting, in my opinion. And that's where we've seen some really creative strategies come through. Levering up on XSOL or being able to short with the same leverage with XSOL has been an interesting unlock there. And then obviously the big one is looping the staked HiUSD yield. So if you can borrow more stable coins against your existing staked HiUSD, you can mint more HiUSD and stake again, and so on and so forth. And the APYs have been pretty large because we have like a baseline of 13 to 15%. So people are just multiplying that by 4, 5, 6x. It's kind of wild. With the routers and whatnot, like Titan, that's been a massive unlock for us. They're a DEX aggregator on Solana that's like super high performant and doing quite well. They have enabled a lot of our users to get to the stablecoin a lot more readily. Coming from USDC to get to HiUSD, it's been a massive unlock being integrated with them. Because prior, like the way that the core bare bones protocol works is you have to have JITO-SOL, right? And then now Hylo-SOL, but you need to have an LST to get in. And so what we were doing is patching together trades from USDC to JITO-SOL, which may slip. You may have some dust left, and then that all needs to get deposited into the protocol. So getting into Titan's system has been amazing for the UX. Like users are just seamlessly going from stable to stable and back.
Awesome. Digging into the, a lot of the activity, I guess, sort of on the leveraging side is interesting. I guess I'll point out that I think kind of the overall protocol TVL has basically 10x from the summer, from maybe the $10 million ballpark to like $100 million or so kind of TVL ballpark. I guess, does that present any concern from like a kind of volatility of the TVL perspective of if there's sort of if we go into a little bit of a risk off period, then you could see that retract significantly because so much maybe of it is leverage based?
Yeah. And the market forces are going to do what they want to do, but the protocol is designed in such a way that it works with the market. So like, to put in perspective, the SOL holdings in the protocol are at an all-time high. So if you look on DeFi Llama, it's a chart up and to the right in terms of SOL. Price of SOL, not so much, right? We're in like a pseudo bear market right now. I don't know what you want to call this. And so with that, like obviously the dollar TVL comes down, which means leverage becomes less attractive. We have set up the risk management system and the fees in such a way that they guide the market to de-risk, essentially. What we've essentially done is lower, like in that stability mode 1 situation I was talking about, we lowered the fees by half. So 50% discount on our take for you to come take a bet at the bottom. And so we've seen that our setup and these levers being moved with the market, kind of correctly gets users to behave in the way that the protocol wants to see. And so even through like the October 10th crash and the subsequent correction, we've had no stability pool activations. The market has just kind of done its thing in terms of de-risking. And then the protocol is setting people up to grease the wheels on de-risking at the same time. So it seems like it's working as intended.
Gotcha. Yeah, no issues on 1010 is that's good. That's great to hear. Interesting.
Not many people can say that.
Yeah, I don't know. I think you'd struggle to find maybe a list of protocols that didn't at least encounter some sort of issues. Cool. Maybe I guess on the other side of that, we talked about kind of the use within DeFi for leverage, but then also the points piece of that. I guess, can you speak to the point system a little bit? Like, is there anything you can share there in terms of like, as far as I understand, we're in sort of like a season 0 and maybe something like a season 1 is coming. I don't know necessarily what that means or, perspective towards like a future token, for example. But of course, that's what people are kind of betting on by participating. So anything you can share there on the point system?
Sure. So season 0 launched, I think, a couple months ago. It's maybe 3 months ago at this point. And what people have been doing in season 0, this is like the biggest kind of you're in the ground floor season. So people that have been parking capital with us from the beginning have been rewarded with these boosts, right? On all these referrals that they brought in the early days. All of those have kind of compounded into earning more XP faster. In parallel to that XP is crowns. So as you reach different levels in the Hylo XP game, you earn more crowns. The more referrals you have, the more crowns. Those crowns are all going to convert to something important in season 1 that has to do with more points. Season 1 will be launching probably by the time this episode airs, because we're airing, I think, after Breakpoint. So season 1 will be up, and the points earned in season 1 will have a very different utility to the points from season 0. And I can't say much beyond that. My CMO will kill me. But the crowns are important. The points that you earn are important, and they will have a different purpose from season to season. Season 1 is a particularly important one.
Gotcha. Very cool. We don't have to go any deeper there if your CMO is going to kill you. But I will, I guess, urge folks to go check out the various markets, especially I think, sort of like RateX, Exponent, check out kind of like how some of these like with point, no point kind of tokens are being priced, and, the PTYTs around some of that stuff is, see what the market is thinking, at least in terms of like pricing out the points, in terms of expectations there. So cool. I guess another big bucket that we've kind of glossed over a little bit, but I know that it's in there and you've sort of mentioned it. You talked about how in certain kind of risk modes, the fees for the protocol change. So I guess, can we talk about, sort of the revenue structuring and opportunity for Hylo? Like, how does it currently generate revenue, and what's sort of the relative contribution of those revenues?
The biggest revenue driver for us is volatility. And so when prices are going up and down, you have people entering and exiting XSOL trades, right? And this is kind of where we make the largest part of our revenue stream. It's essentially a flat 1% fee, which may seem high to, the untrained eye, but tell me about what it costs to open a trade on a perp DEX, and if you hold it for a long enough period, right? The funding rate and other attached fees eat into your P&L quite a bit. So that 1% flat tax we think is pretty attractive, and it's enough for us to be generating, multi-million-dollar run rate just off of XSOL by itself. So volatility is the primary source of revenue for us. We do take a small clip on the epoch to epoch yield emission. So as the LSTs underlying the protocol earn their yield, that yield gets transformed to dollars and kicked over to the stability pool. We take a small percentage on that. And then we've recently also diversified our revenue stream to the Hylo validator. So there's a whole other product area that we have kind of glossed over, but we have the Hylo Sol LST and the Hylo Sol Plus LST, which is kind of a points trade-off. Once again, where you're earning more XP with the Hylo Sol Plus, and all of that yield goes over to the Hylo Sol side. And so the validators is on the smaller side of our kind of revenue setup, but it's been a nice additional source, and we're finding ways to deeper incorporate and kind of vertically integrate around the validator as well.
Cool. And I want to talk about Hylo Sol more as well, but I guess maybe before we get there, just thinking about the current kind of model on how revenues are generated, like, do you think this can continue to scale, from 100 million in TVL to more, 500 million, a billion in TVL? Like, no issues there with, current take rates from your POV, or like Hylo Sol, do you have sort of like other additional products in mind to kind of continue scaling out that revenue base?
Yeah, so we are actively monitoring what we could be doing next in terms of X assets, and we already have a plan for rolling out a framework for non-yield bearing assets to be in the fold as well. So XBTC is the next area that we're looking to get into, and with onboarding Bitcoin, we can see a lift in terms of just the stability behind the stablecoin, right? Because the volatility level of Bitcoin is a lot lower than Sol. Having a good amount of the TVL there and attracting some of the open interest on Bitcoin speculation to Hylo will be kind of a big deal for us in terms of like the next 10x in TVL and also in revenue. The protocol has been kind of described as like an on-chain MicroStrategy by Tolly. So, and it's similar to that, but it's not exactly, because we don't really manage it. The program manages everything. But to get that kind of return on Bitcoin, this kind of soft leveraged return on Bitcoin, XBTC is going to take us there. And the OI on Bitcoin on Solana is the second highest behind Solana. So this is our next target area. And we're leaving the door open for other X assets as well. So potentially like an X Zcash, or maybe an X ETH that has like ETH yield, or an X hype. These are all part of the potential frontier to expand Hylo into being the home of tokenized leverage. And off the back of that leverage and volatility kind of activity, funding a stablecoin and generating yield, like on-chain yield for users.
Cool. Yeah. To the micro strategy, or the strategy comment, it's I guess in his case, he hasn't quite had the reverse direction of, selling assets for stables. He's only had the one direction and just taking on more debt. So I guess you guys have that other half of the picture at least kind of already baked into the design. I guess to non-natively yielding assets, what's like the key difference there? Like how exactly would you structure the product to make it sort of operate in the same way?
Yeah. So the trade-off that you make there, right, by having a non-yield bearing asset, because the SOL, right, with its kind of high-ish inflation rate, the yield that you get off a validator is like 5-6% annualized. The volatility kind of offsets that yield, right? Solana kind of swings up and down like a commodity, right? Where gold and Bitcoin have a little bit more in common, right? And so what we see with a more stable valued asset is that you can charge a funding rate at a much lower rate than you would on a perp stacks. And we're looking at making it evolve with the market. We could also just make it a flat funding rate forever. And that's kind of how we're seeing that. So with non-yield bearing, the asset needs to qualify as something that's like stable enough. And with that, we have the kind of ability to charge like a very nominal funding rate, to essentially pay the stablecoin holders for taking the risk.
Gotcha. That makes a lot of sense to me. I was going to say, initially it's like, the design kind of somewhat depends upon the yielding asset. So to introduce a non-yielding one seems like a bit of an overhaul, but makes sense if you add that additional sort of fee basis there. I guess let's get over back to the yielding assets. You mentioned Hylo Sol, and I wanted to get back to it. So you have your own LST now, and I guess validator as well. How does that change things? You said previously that you needed Jito Sol to sort of kind of enter into the protocol. Now you have Hylo Sol. I'm assuming though that there's still kind of Jito Sol and maybe other LSTs kind of underpinning some of the X Sol today. Where are things going now that Hylo Sol's in the picture?
Yeah, so the architecture of Hylo on the Sol side is that it can accept multiple LSTs. And this has maybe been a little bit overlooked because people are just having fun with the protocol for the first time. Not everybody's dug into what the grand vision is, but it is able to support a basket of LSTs. And as a kind of guinea pig for the second LST on board, because Jito Sol obviously is the most established validator set and LST on the market, we introduced Hylo Sol. Hylo Sol, single validator running on the multi-validator LST program, but it's currently single validator run with Sentinel or Phase Labs. We operate that LST. We have a higher yield than pretty much any LST on the market. This is like 10, 15 epochs trailing. We've had amazing returns on that just because of the point splitting mechanism with Hylo Sol Plus. But the idea with Hylo Sol is to bring that into the fold as the second LST into the protocol. And because it has a higher yield than Jito Sol, we can lift the yield on the stablecoin. That's kind of the idea, where we have our operation with the validator. There's a lot of stakers that don't even touch our protocol necessarily, but all the yield that gets generated for the specific LST on that validator can now be wrapped into the protocol itself, which is pretty cool. The fact that we can kind of start to vertically integrate our own infrastructure into our own protocol.
Yeah, and so you mentioned that some of that extra yield is coming from kind of the point splitting that's going on. So I guess can you dive into that, explain that a little bit more?
Yeah, if you look at a lot of the mechanics in Hylo, there's this concept of yield discrimination or amplification, where the core idea pretty much is you have a base, like an N of assets that earns some percentage, but N divided by Y or whatever, some fraction of those are not included in earning the yield on N. And we do that with the unstaked and staked HiUSD, right? This is how the yield gets into the double digits, because if all of the HiUSD were staked, they'd pretty much only be earning like the 6-7% return on the LST in dollar terms. Hylo Sol Plus does that same effect for the Hylo Sol LST. So all the Hylo Sol Plus traders are pretty much just holding Sol. It's a 1-to-1 LST. However, that Sol is staked on the validator. It's earning 8% a year, or whatever the 6% like base rate is. All of their yield is just being given to that select group of Hylo Sol holders. And that's what brings the yield up. It's this amplification or discrimination effect.
Gotcha. And can you speak to, like, do you know what that breakdown is today, for example? I'd be interested to know, like, this Hylo Sol versus Hylo Sol Plus, what kind of, how much interest from the market there is for the kind of the non-yield version of the asset.
Yeah, I believe, I could be wrong. I think it's sitting at about 10 million for Hylo Sol Plus versus the 50-ish million on Hylo Sol. I could be wrong on that. We might need to check like the stats dashboard to double check. But it's not a like a 50-50 split. It's definitely like a minority of people that are just like gung-ho points farmers that want to be in that one.
That makes sense though. So it's you're sort of like monetizing the really, you know, kind of highly speculative traders, and sort of repositioning their yield to the other people who are just happy to take kind of the consistent yield. It makes a lot of sense. Interesting. So I guess you have those two pieces of the picture, and Hylo Sol and Hylo Sol Plus now, obviously, they're also are playing into this point system. Did that sort of meaningfully change, like, kind of how the original point system was from, you know, just the existing HiUSD and when you just had, you know, HiUSD and XSol? I guess, what does that breakdown look like now? Like, if I want to go out and earn a bunch of points, should I be pointed in the direction of, you know, the XSol assets, the HiUSD assets, or the Hylo Sol assets?
From the top down, I mean, XSol is the easiest way to earn points in Hylo. It's 20 points per dollar per day of your holdings. I think the next highest is probably 5x for the stablecoin, for HiUSD by itself, and for Hylo Sol Plus. It's 5x per dollar per day. And then it goes down to like $1, 1 point per dollar per day for like the staked stablecoin and for the Hylo Sol LST. So the breakdown is really, it's totally risk adjusted. The more risk you take on, the more points you get, pretty much.
Makes total sense. Okay. So you mentioned XBTC and maybe other X assets kind of coming into the protocol. You sort of mentioned offline to me that Hylo V2 expansion coming at some point. Is that what Hylo V2 is or would be, or is Hylo V2 separate from other X assets coming into the fold?
So the framework for non-yield bearing assets is kind of the largest lift for Hylo V2. But also users will be pleased to find that there are a lot of kind of quality of life changes coming. So we'll be kind of reskinning the app. There will be a bunch of more interesting features that people have been asking for. So all this feedback that we get from the community and from investors, we don't take it lightly. So we're trying to evolve the X asset experience into something that's on par with a world-class perp trading platform like a Hyperliquid, right? So we're taking cues from that side of the world and trying to move away from just like, okay, it's a token minting and redeeming process to this is a legitimate and different profile way of taking levered bets on different crypto assets. So that is the holistic idea of what Hylo V2 is. And I will mention that HiUSD is not going anywhere, and it'll only get stronger as a result of these new X assets coming into the picture. We don't plan to make multiple stable coins or any of this stuff that we find kind of confusing and a little maybe last cycle of UX. Like HiUSD will be HiUSD, staking it will be staking it, the yield will be great, and then on the back there's just going to be more assets to speculate on and a better UI UX to do that with.
Okay, cool. So no, I guess technically the base model is already kind of a dual token model, but different from maybe some historical dual token models where you add on to the protocol and add more tokens to then split up the rewards from the new parts. We're not doing that here, it sounds like, which is good to hear. I guess you mentioned kind of what you're focused on, in terms of like offering a really good product experience. How does that then play into some of your decision-making thought process around, obviously some of the integrations within the ecosystem are important. You mentioned updates to the app. Like, where are you thinking there? Like, is Hylo trending towards like consumer mobile app experience, or like you want to be integrated with partners like, Rabby and Phantom, and a lot of these wallets, for example, have integrated like Hyperliquid perps trading as an example of something like that?
Yeah, so mobile is always going to be a priority for us. I think we have a pretty solid mobile experience as it is, and that's just with like React. We will continue to make that good, but we also know from the data that most people use our site on traditional web browsers, and so like the priority is usually there, but integrations will continue to be important. Like directly in the wallet, you can already trade our assets like XSOL and HiUSD from Phantom and Solflare and whatever wallets are connected to Titan and Jupiter. So that, I think that will be a thing, but we want our home to be Hylo.so. And so we want to provide like essentially the best experience for like managing your trades on our site, but then be ubiquitous and be available to mint in a lot of different settings too.
Shout out to Peaq for sponsoring today's episode. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders, and the first machine economy free zone is live in the Emirates. And it's all happening on Peaq, the machine economy computer. Head to peaq.xyz to find out how you can benefit from the age of automation. That's peaq.xyz. Thanks to Sablier for sponsoring today's episode. Sablier is the leading on-chain solution for token distribution, trusted by teams like Maple, Immutable, and Axie Infinity. The #1 distribution protocol on EVM is now live on Solana. Automate your airdrops and token vesting, streamed by the second, transparently and trustlessly. Secure, audited, and ready for Solana builders. Get started at sablier.com. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Makes a lot of sense. Maybe to change gears a bit, something I'm curious about. So obviously, and maybe changes to the protocol and adding more assets kind of changes your answer to this. But like today, Hylo's pretty connected to like Sol price and obviously the inflation staking rates. The original kind of SIMD proposal did not go through around reducing that inflation rate. How do you view that in terms of like as a risk to the protocol though? I've seen, just generally on CT, for example, like support for reducing that inflation rate is kind of popping up again. I think people are, maybe they're more concerned about it because price is down. I don't know. You could make up a reason for it, but I don't know. How do you think about that? Or does just, expanding to more assets and offering different products like kind of allays any concerns there?
Certainly the expansion is a hedging against like the yield potentially going down on the base of Sol. I think that this one's called 441, right? The current Cindy. The difference here is that it's just a lot less drastic than 228. 228 was talking about like a kind of a market oriented mechanism for like not overpaying for stake, where you bring the yield down if there's too much stake on a validator or on the network in general. This is a lot less drastic. We are not as concerned about this one as we were with 228. With 228, it would make the yield pretty much unpredictable and subject to market forces and eventually like just kind of fluctuating and more volatile, which we don't like for our kind of products like APY profiles. We like keeping the SHI USD or SIUSD APY above 10%. And so having that constantly fluctuate would not have been great. I think the current proposal is a lot more mild. I am less concerned about it. I think it's potentially long run better for Solana's economics to emit less over time, but the effect won't be as sharp of a drop off or as volatile. If the upside of this thing passing is, well, Sol price go up, I don't think we'll be complaining. But as far as the baseline yield goes, I think it's a much more kind of reasonable incremental step for Solana's inflation.
Gotcha. So the bigger concern there with 228 was the kind of constant fluctuation in what that yield profile would have looked like versus in this case just kind of cutting whatever that base rate is and not having kind of an additional sort of fluctuating market around it is less of a concern.
Exactly.
Cool. I guess zooming out, I kind of want to maybe give you the floor a little bit. Like, we've talked about View 2, we've talked about potentially bringing new assets. Like, what are you most excited about or looking forward to for, if that's Hylo or, upgrades or updates to Solana that kind of help further your mission? Like, what are you looking forward to over the next 6-12 months? What are you thinking about?
There's so much cool stuff happening on this chain that I'm surprised every day. I think like the few that come to mind, I think definitely I'm curious to see what bulk looks like and what Solana's answer to a hyperliquid could look like in the presence of like additional systems, right? Because the way that they're architecting this is like not fully connected to like the existing validator, but it's like a sidecar. I think that's an interesting architectural decision, and we'll see how that one plays out. But I'm pretty optimistic. It sounds like a great team. I'm really just looking forward to more innovation in the DeFi landscape, new primitives, more capital in DeFi. I think like that's something that we need. Just being a little bit spicy. Ethena dwarfs the entire TVL of Solana DeFi. Just one protocol, right? There's probably multiple protocols in the top 10 of Ethereum that dwarf the entire space here. We have a long way to go. And so I'm looking to the teams in our kind of like class of startups and all these new ones that are coming in to essentially champion Solana DeFi becoming, a bigger thing like in broader crypto. And also part of that is there's an angle that we have here that I feel like is very unique, which is this internet capital markets thesis and new types of assets coming on chain, stocks coming on chain, mortgages coming on chain, like different credit markets coming on chain. These are all like a little bit experimental. It's unclear where they go, but clearly like Wall Street sees value in this, and you can tell from the ETF inflows that like people are loading up on Sol. So I'm very optimistic there. And really just want to see where other companies like on the space, will take it, like, and how much farther the DeFi space can grow here.
Love that take. Something that, I think is worth pointing out is like when you look at the beginning of this year, the Trump coin was kind of a massive liquidity injection to the Solana space. I know stablecoin, like aggregate stablecoin TVL, nearly doubled or maybe actually doubled from maybe 5 to 10 billion ish or so. And yet, like you mentioned, the DeFi growth has maybe been a bit slower. So maybe just forward-looking statement here. Like, do you think that is a slow and steady type of thing? Like, we'll just see gradual growth there as the products build out, compound, and get a little more Lindy? Or do we need to see more events? Not necessarily, it doesn't have to be a Trump coin, but events where something big and interesting kind of lands itself on the chain, and then that results in like step change increases to kind of DeFi usage.
Yeah, I think there's a few angles here to talk about. I mean, Lindy effect within like really, really core DeFi is kind of hard because DeFi is hard, right? And we've been trying with our own products to make this as accessible as possible. But there's a limit to how accessible you can make DeFi because like, you're throwing money into a program on the internet and reading some numbers and then like trying to understand a mechanism. Like it gets very technical very quickly. I think stablecoin growth is really telling. Like that's a massive piece. And I think a transition from unproductive stablecoins to productive stablecoins will be pretty good for Solana DeFi. Because if you think about right now, like I don't know what the market caps are, but between Circle and Tether stablecoins, we're probably, I don't know where it is, 20 billion or a little bit less than that total. And all of that is unproductive capital for the most part, right? The raw stablecoins are not producing anything outside of if they're deployed in like a lending market, right? And so once you can start getting this like intrinsic yield generation on chain and getting these assets into the hands of more users, I think that will naturally flow into DeFi and bring more capital here because like productive assets are better integrated assets. HiUSD and staked HiUSD are really, really good for DeFi because they bring something to the table, right? They're harnessing the network yield and turning it into like dollar value. And then my last comment on that is just like, we need flow, right? Like a perp solution that kind of is the hyperliquid killer, or it's like its own unique thing, kind of like Pump and the meme coin frenzy was for Solana. More flow, better, right? Like that just means more yield to go around and kind of more traffic and more reason for people to branch out and experiment in DeFi too. Because if you get caught by the bug of trading, then you may want to take your winnings and go do something else with them, and it'll flow capital back into DeFi just the same.
Yeah, love that. Great comments all around. I do think we're seeing more and more that this like, where is the Solana Perps app is becoming a very prevalent like opinion to have, I guess. I think maybe it kind of went by the wayside for a while, but now people see Hyperliquid, like you mentioned, and they're saying, hey, we need an equivalent or, better product if possible on Solana. So I do think that's a great point. Well, it was great having you on, Plish, Narek. I guess if you have any last comments outside of what you just said, I'll let you run with it. If there's any specific or important dates coming up, for example, like season 0, season 1, I don't know if by the time this episode comes out, that will have already passed or not, but I'll leave the floor for you and we can close things out.
Sure. Yeah. So, I mean, hopefully I would have met many of you at Breakpoint in the coming week, and this will come out after Breakpoint. But look out for season 1 starting probably right around the time that this airs. And then Hylo V2 is coming early 2026. And so that's kind of like the next big thing that we're looking at. Other than that, I don't know if I have anything else. I appreciate you having me on, Danny, and it's been great working with the Blockworks team. Stoked to be on a podcast that I listen to all the time.
Awesome. Yeah, glad to have you on. And for the listeners out there, I think it's behind the paywall, but if you are subscribed to Blockworks Research, check out Carlos's report on Hylo that he just put out as well for some more. He goes way more in depth, gets into the details and really digs into the story there. But yeah, glad to have you on, Plish. It was a great conversation, and we will see you all next time.